Start the recording. All right. So, again, 10 a.m. spike. No structure here. We finally create a swing to risk off of. That's important for later on. There's your swing, right? We'll get to this in a second. This, again, similar to yesterday, you've got lower time frame, higher time frame, intermediate time frame. Every time frame it operates the exact same way. Right? You've got lethargic price action leading to liquidity being taken, which then facilitates your lower time frame order flow, right? So we came up and we traded right up to here at 10 a.m. and the majority of you should have started looking for possible setups here. Is this a valid or credible high? No, that's garbage. We're expecting that to get taken, right? You look at this on your 15-minute candle, fair enough. But what you're looking at is that you have a change in order flow that occurs here. It trades back in. We fail above this high. After taking a higher time frame high, oh my God, to the left, which is this one. So we've taken that here. We have two options. We're either entering a range or we're going to violently move down, right? And what we get here is higher time frame range that has what kind of structure to it? What does this look like? Does this look like that our higher time frame objective is completed and we are going on a rocket ship? Or does it look like it's leaving this for later on? We never took it here. We didn't take that high here. We're lethargically pulling back. Where's our objective? Our objective is the prior swing. Right? So now you've got different areas to look at. You could look at this here. Right? For your 70, you get your first tap here. What's our signature? What's our signature to get involved? We need inducement. Trades up. What is the purpose of this leg here that's trading up? It's to mitigate the prior area to the left. Typically, your SMDR. So we trade up, we mitigate it. This is the institutional buying that takes place first. And then we run out those longs. And you have two different options of getting involved. You have your aggressive sweep model entry, where you're then expecting here to be the final move down. And you're waiting for that inducement before you get involved. You'll notice that you could have had a scalp here off of that trigger at 248. And you might have got 10 points. In fact, you would have got 14 or 15 points out of it if you would have taken it off of that high. Cool. But you're still bearish here until you get failure. And now you have a lethargic movement trading down, which you're expecting to trade into failure. That failure then signals the lower time frame movement to be done, right? Which then leads to a higher time frame shove. And ideally, what happens afterwards? We get held up somewhere, and then we return back down to the pocket of that. You've got this here. Surprise, surprise. Right? And in between this, we'll get into this in a second. In between this, what do you have? You've got your SMDR here that's responsible. You're getting your bounce out of it here that mitigates the prior zone, right? You got your first tap into here, which then led to what? Your lethargic movement leading to rejection, right, inside of this prior zone that we left. You could argue we tapped into that here, fair enough. This movement down, that whole purpose was to give you your second tap into this area, which was responsible for breaking this movement. Okay, so you've got a few different options here. You have, let's actually get rid of all of this, and we'll mark it out in terms of major structure, right? As if it was your first day at the charts. You have your higher time frame high here. Where's the SMDR that breaks it? Right? You've got your swing here, that's your higher time frame one, or your intermediate time frame one, whichever you want to look at it. You've got your lower time frame one here. Right? You'll notice how many trades coming out of this area. Right? This double bottom here, which then failed higher. You can characterize that here. Right? This is one of the few shorts that I took today, as I'm expecting a trade back down into our objective here, right? So you've got your, but regardless, I digress, you've got your SMDR, multiple mitigations into it. We then run it and then go, liquidating all the weak hands that were in here, finalizing in our objective. And then what? You've got your downtrend here, right? You got your protected high here. You got your higher time frame high here. What area broke it? Right? Right there. You could argue this being the SMDR that broke this area. But I'm looking at the area that they really made a decision to change from a downtrend to an uptrend. Our expectation of this area, if we're following structure to continue, is what? It's to trade up into this zone and then trade away. So where did the market make a decision to not continue with what it's been doing? Was it here? No. Right? So you'll see a lot of market structure knowledge out there, and that market structure knowledge is kind of cookie cutter, almost like this is always this and go from there, right? This is your entry model. If this does this on the 5-second chart and the moon is shining and there's 6 clouds in the sky, then you can go long. Right? But what they're not doing is they're not following where the market is making decisions. That will astronomically increase your trading ability. Astronomically. If you're looking at whereabouts the market is making decisions. Right? Stop looking at entry models, follow price. Right? Stop looking at patterns, understand how the market is moving. This area made the decision to break above this high. Now you could argue this is a lower time frame protected high and we should use this area here. But I like the area that the market decided to stop doing something. That low to me is very, very important. Right? So as a result, you could have argued that you got a bit of a bounce out of this area, or that we traded back into it. And in fairness, that long there is beautiful, right? Tapping back into this SMDR, which we then liquidated and then continued higher. And you could argue either way. You could argue that once we liquidated this SMDR low here, that was a lot of liquidity, and you got a large move out of it. Fine. If that's what speaks out to you and you're back testing that strategy and you see a win rate with it, love it. Obsessed with it. Continue on, right? And then you're wondering when to stay out of trouble, or when you're expecting a higher time frame versus this low to be in jeopardy, right? So you get your trade here. We're in love with it. We trade back down. We respect it. And we get something like this. That's not higher time frame price action. That's leading to a rejection. And now you look to the left to determine whereabouts that rejection could be. Essentially, you're looking at this prior swing. Right? That's how you stay out of trouble and how you get better with that. Now, for us, and I mean, Jesus, Mikey literally called the area where we were looking for a top to then trade down. I think that we were talking about it as well. Like, you've got your prior zone here. Well, here's your prior zone. There's your pocket of the prior zone and your midpoint, 372.75. How about to the tick? Does that work? Right? Failure comes down. Do we got to change an order flow up there? Technically, right? That's a little challenging, honestly. But what you're looking at is, at minimum, you got your range here, and then that finally breaking trades back in and leaves. And if you're not comfortable with any of this, fair enough. You've got this break that trades back in and then leaves. And this one was a beautiful chop, right? But what I'm digressing and saying is that you have to make sure you're looking at something that works for you, right? Which means you don't have to be involved in here, but you see this and now you've got your break of order flow. If we've taken a key area, right? Whereabouts is our pocket? There's your pocket there, right? And then you pair this with structure and narrative. Do we have to trade back down? Sure. What's our minimum target? Well, probably the prior intermediate time frame swing. How many swings are we at? Well, we've kind of just made our aggressive move and we've tapped back in, and now we're looking for at least this low. And that might be your only trade of the day. Okay, love it. While the rest of us are waiting for our signature to then get long. Whereabouts? Whereabouts are we waiting for a signature? The pocket of the area responsible. 280.25. For me, missed it by a tick. Oh no. Right? What's this? This is intermediate time frame inducement, which then gets ran. Our expectation of it getting ran is because you have lethargic PA coming into here, leading to rejection. Drops down right into our area of interest. By the way, that didn't even tap into it. You then get your double bottom. What's the purpose of this low? To mitigate the prior area of interest. We got that. And this low failed to put it in a new low. That becomes a weak high. We trade up above it. We trade back in. To where? For those of you guys that look for your conservative entry. There it is. 89.50. 3 points of drawdown. 3 points of drawdown on your conservative trade. 3 points. And then 1, 2, 3, 4, 5, 6, 7, 8 minutes later, you're up 40 points. And how stressful is this trade? Right up to your area of interest. Not here. No structure in this. This area already mitigated. You've got nothing until this area here. Right? At worst, you're following your lows up. Right? And you're out at this low of 23.50 when it gets taken out there. Does that make sense to everybody? There's going to be a Wombo Combo video coming out this weekend, where you guys are going to to really dive in to this and your expectations of price. Many people will be able to find solace in the fact that if you're looking at this here, oops, your target is the 23.6. That's your sort of conservative target, barring any major failure, right? But you need to see some sort of a higher time frame shove in order to do that, right? So I don't know. Let's even say our conservative entry here, and we've got 10, 11 point stop. 48.5 points, 50 points. I'd say that's pretty life-changing, right? You have many different opportunities to do that in here too. This was a beautiful long on that sweep. You then got your trade back in here and then left, right? But you're looking at multiple ways of getting involved. It's not going to be the same every time where you get your change in order flow and then it taps back in to the pocket of your current swing. And one of the ways of understanding that this movement isn't going to tap back down into here has to do with how urgent the price movement is expected to be. You've got this now, right? Sometimes we just won't, right? Other times you'll look at these order blocks and you'll get involved up here, and then it trades all the way down into your pocket, right? There's no one-size-fits-all approach, which is one of the main reasons I prefer sweep and narrative, because I don't want to be messing around in here with whatever it does. I want to get in on the manipulation so that if it stops here or here or here or comes all the way back down, not really relevant, right? Either way, regardless of whatever, you could have gotten involved here. I really don't care. As long as you're following structure, being lethargic, narrative of trading into an objective. Does this look like the objective's finalized? Yes. You could argue, well, we did the same thing over here. Yes, but this being a lower time frame objective, this being an intermediate and higher time frame objective. Very different. Very different. We know that lower time frame reversals come out of lower time frame areas. They're responsible for price continuation. Price reversals come from intermediate and higher time frame areas, especially major trend reversals. You'll notice that this was actually an uptrend on your higher time frame, right? So we didn't change trend. This was a retracement, right? Anybody have any fun questions or anything like that going on with today? How did we end up doing? Stupid spots around OTEs. Lower time frame ones or higher time frame ones? There was only two real ones that that occurred today. Yes. Lower time frame ones can be a little tricky. Lower time frame ones can be a little tricky, right? For example, if you're looking at drawing the pocket from this SNDR, right, then it actually knifed through this, right, before continuing up, right? You could have, I suppose, drawn it from there, but that's basically what we're looking at here anyway. right? And then we're seeing this movement up, right? That's kind of internal, okay? Sideways. Right? It's usually safer to expect your swings to continue until you get in deep into a trend or take an objective. For example, your objective may have been the midpoint of this zone. I think that's a fair objective to have. Right? So now you got this here. So you're basically saying, I am bullish and trending after this breaks, right? Because remember, this took our higher time frame high here at 288. So we expect to enter a range at 288. Until then, 288 being here-ish. Until then, we're being told we're screaming higher. Screaming higher, right? So you're looking in here at, like, hypothetically, if you're trading this is your pocket. Bang. Expecting this movement to lead to an objective. That objective being this high. I bet you did, you legend. Right? Once we take the objective, now we're going to rebalance. We're going to figure out what we're doing. Right? And you'll notice that we have lower time frame structure, and now you're looking at this from a multi-time frame analysis. Perspective, going, what are we trading down to? We've got our prior swing here. And our SNDR, really. Okay, so now you're looking at retracements that align with that. We found this pocket here. So now once we break, you've got your SNDR here for structure. We tap back into it, we leave. We tap back into this one, we leave. Or you're looking at it from until we hit this 351 area. I'm not looking at pockets necessarily. I mean, you can, right? Like, but then you're looking for confluence. So you've got this 307 area here, which is your pocket of this. Cool, right? Whether you draw it from here or here or here or whatever. I'm sure there's many different ways to do it. This is the way that I would look at, given that this is a swing. Right? We didn't trade back down to the area of the SNDR, and you could probably say something like this or this. Right? But let's just, for instance, leave it here. And you've got your prior swing here. So you got your midpoint of 303.25. Right? So now you're looking for a signature in price. You've got this here. Is that good enough? No. We then drop down into your pocket. We get a sharp movement up. We then try failing. We can't. This body ends up closing on its high. Right? So you're looking at, we're trending here till we hit an objective. We're then looking for trading back into prior zones and leaving. Prior zones and leaving. And you'll probably notice something like this. Now you got your retracement here. We haven't left a zone yet, but that looks pretty beautiful as well. Expecting continuation until we hit our objective, despite how beautiful this looks on the short side. Right? And then you have this trades up. You don't have a retracement here, right? So you have something like this. Well, that never got hit. We actually traded back into this area responsible for breaking here. No real entries here unless you're looking for liquidity sweeps. Right? And now we've hit our objective. So now what's our expectation? Our expectation is to retrace. Or at worst, we don't take any trade. Right? We get this spike down. Well, we're definitely looking at like this being long in the tooth for our trend. We're now looking at trading back down. So the obvious question then is trading back down to where? Right? Trading back down to where? So if you had this area drawn out with confluence of this, it then got liquidated. You'll notice that we never closed actually underneath it. And now you're looking for retracements after price tips its hand. Not before. We're expecting to trade down, and then we allow price to tell us what we expect. You might have passed on this trade thinking we're going lower, and that's fair. We can all agree that even drawing this area of interest rather than the one that I would have drawn, is that valid to look at this area being an SNDR? Yeah, I suppose so. You have confluence that we tapped into at once. What else do we have? You have your pocket. Didn't tap into it yet. And with experience, you'll know exactly why. Right? Know exactly why. You know? So, in my opinion on this movement, after we break here, and then you see this strong movement, we're trading down. We don't really know where we're trading down to. This is a beautiful short here. That's definitely something I would have taken. Because we have our narrative going lower, and more importantly, price is now telling us that it wants to retrace. It might be saying in here that it wants to retrace. But you need to make sure that it's clear for you in your system. Right? Now we leave here. Did we tap back into anything? I don't really think we did. Right? There's no real pocket trade here. Midpoint maybe. Right? Maybe midpoint of the prior zone after we left it. That's probably fair. Yeah, pretty much to the tick. Left, trade back into this area here. You could argue again into the prior zone, whatever. Right? But we're looking for this retracement to trade into our area of interest to then go higher. Or at the very least, trade back into this. We might not expect it to take the high, but certainly to trade back up and above these highs here. How do you recognize these push days versus rotation? Higher time frame reactions. Usually the second distribution on a higher time frame, for example, say we have our high here. Where was it? 288 we said. And usually we'll build an SNDR, we'll take it, we'll trade back down, and then boom. Right? I need to see something similar to this. If I see us take an objective, kind of trade down, trade up, and then this movement doesn't really unload, then I'm expecting just continuation. I'm just expecting continuation, right? And it's usually dependent on this, right? I'm expecting if the higher time frame is going to unload, I'm seeing something like this on the second leg, right? No trading even to the highs of candles that are swept on the bullish side, and they just go like we're gone, similar to what we kind of saw on the upside here. Very few swings as we're unloading 20-30 points. Very similar to this, right? So depending on what you guys see, guys might look at it like that, what the market's doing. Others might see the absence of something else, which is typically how I look at it, which might be backwards. But if I'm seeing the absence of higher time frame price delivery, then I'm essentially looking for retracements. And then if we're in a range, this kind of flubs along lethargically, and I'm not expecting really high prices with it. But certainly when I see this sort of nonsense and then I get excited seeing this, right? Because I know that this low is now weak, and I'm all over this. And yet another shout out to your boy Mikey for crushing this on stream for you lads. Don't trade against the legend. Right? But you've had, like credit where it's due, you've had some insane bangers in the first half an hour of the day, Bailey. So that's unreal, man. But this Wombo video, it's going to become the focal point of the bullpen when it comes out. We're going to spend some time on it this weekend, and you guys will be very, very happy to look at how to structure these zones and the narrative that surrounds it, which is probably more important, right? Anybody can draw these kind of zones on the chart, but like it looks great for social media after the fact, you know, and if you're here, you're obviously seeing us trade them live. It's not like we're just drawing them when we're here going, we'll see. You know, like what good is that? Anybody that's been here for 5 minutes knows we can trade very, very well, but it's the narrative that surrounds how we're going to trade into it, where we're going to bounce to, how we're going to unfold, right? That's sort of how we're going to look at it. I'm pretty sure I said on stream here that this area was going to build an SMDR, and assuming that didn't break, that we were going to go above this high and then probably run for a while before returning back to this area. That's just literally thousands of days of back testing, you know, and it's gonna be exciting with us trading Robins next year. I'll tell you that. Yeah. Any questions today? Regardless, like, unfortunately, people these days are people use the ability to trade as being a good educator, and that's backwards, actually. It's absolutely irrelevant. Yes, you need to know that we're credible and that we're able to teach the proper things that are going to make you guys money, but our ability to trade these things is absolutely useless if we can't educate others to do the same, right? So given everything that we've kind of just gone over, does anybody have any questions, or does anything not make sense of what we're looking at here? The multi-time frame, the narrative building, the refined zones, why we're not looking, for example, at taking a sweep underneath this or something like that. You guys good? Don't be shy. And if that means some trade specific stuff where you're like, I entered here and I got wrecked, help me not do that tomorrow, or help me understand why it was a good or a bad decision, even if you didn't get paid for it. Okay, backtest more what? Practice is useless if it doesn't have an outcome, right? How's the in-depth course process is going? I've given myself a deadline for the end of November. We're going to be releasing the the structure and narrative modules here pretty soon. It's probably going to be a refresher for a lot of you guys, put into a bit of a different course format. Right? You guys know what an SNDR is. You guys know how to look at and identify swings and zones. Right? But there's going to be some nuggets in there too that we'll look at. Right? I'm debating if I want to put inverse SNDR inside of it or not. We'll see. Watching price and patterns and entries. Yes. Once you know where you're looking for and what you're looking for and why, then it becomes how do you look to get involved. Some of you guys will look at trading an area. And basically what you're looking at is looking for an aggressive reaction to that area. For example, in my opinion, this is an aggressive long in here. But you're expecting this to come down after it trades into this. We get that movement down. You're expecting this to fail. If it doesn't fail, that tells you major pieces of information. If it does fail in here, that's your conservative trade entry, right? Because now what you're doing is you're looking at lower time frame for an entry model, and a strong entry model is inability for the market to go lower when you're looking for a long. Likewise with shorting, you're looking for key areas and the market to attempt to go higher and it can't, right? Key areas after it's exhausted its narrative. So for example, you get your change in order flow that occurs here. We're then trading up. You've got your inducement, right? That should be a prerequisite for the majority of you guys that are looking at growing your accounts. So you want to see selling. We then want to see them get run out. And now you're looking for that inducement to fail. So you've got this here where we open, we trade higher, we trade lower. That's an expansionary bearish candle price movement. Or you're looking for the market to attempt to rally at an area you would expect it to. And what did it give you? It gave you a perfect doji candle. Well, that's kind of garbage, isn't it? Right? What happens after this candle here? Death. 25 points straight down, 2 minutes. Not including the exhaustion that came afterwards. 40 points. Bang. Right? What's price doing? Is there an entry model selling here? No, there's not. What's price attempting to do? Well, try going higher. Obviously, there was a lot of selling. We've just broken order flow. We've traded back in. And now the market's trying to go higher and it can't. Goodbye. See you later. Trade back in. See you later. And you'll notice other things. Market trying to go higher and it can't. Market trying to go higher and it can't. Leads to selling, selling. Right? Pair that idea and short-term narrative with what the objective is. Your objective might have only been to this zone. Right? So it's not triggers necessarily. Those are kind of almost training wheels, right? And then sometimes your trade doesn't get triggered. For example, if you were looking for a change in order flow here and you're looking for it to trade back down to 47, 48 and you miss it, then you miss it. Okay. That really sucks. You would have got tagged into this one. Okay. And now your job is to study how price is reacting in these areas so that you don't miss the majority of ones more often. Sometimes I get tricked or maybe confused by the last candle sweep being just a wick, not trading through its open. For example, bear candle wick in a buy scenario and bull bar wick in a sell scenario. I find myself sometimes hesitating, waiting for a candle to trade through. How to deal with this in the best way is just focus on the area of interest. And right, so it sounds a lot in that question NQ. Number one, that you're not entirely confident in the area that you're selling into. And that's fine, right? For example, if we're here, are we that confident in the bearish side? Right? We can look at this as a change in order flow, okay, but is this really a high confidence move that we're anticipating here? Right? That has to do with what you're seeing, with your understanding of what the market's doing, what it should do, etc. This is exactly what happened here until it traded into our area of interest. A high, a high, a high. A high, a high, a high, a high. Right? But that might not be clear enough for you, and that's fine. Honor your experience and go with it. Instead, how confident are we on the bearish side now? Probably a lot more confident that we're going to see lower prices, unless we see something else entirely. Like maybe you're looking at this being the prior swing or whatever else. But we're looking at objective-based trading. And at the very least, if this trades up here, you might get a trade back down here and you get 10 or 20 points or something like that. Right? Not every day is going to play out exactly like we want, but we can all agree that this is a major higher time frame selling leg, and now we're looking at least a little bit of continuation as it trades higher. Right? So do we have our pocket of where we're expecting us to retrace through? Yes, we do. You might not necessarily get involved this aggressive, but instead you've got your candlestick module there. You're looking for failure, right? You might pass on this one because you didn't get exactly what you wanted, but you understand my point, is that you seeing exactly what you need to see to get involved gives you clarity and confidence, because if you don't see it, then you don't trade it. Right? And if that means you don't trade at all today and you're like, well, I got a lot more studying to do. This didn't make any sense to me. Right? People sold here and made a lot of money. Right here, middle of this movement. That doesn't have to be the way you trade. But people are making money all over the place because they're managing their risk properly and they're understanding where the market's moving to. Right? You've got to be confident in your area. Otherwise, like, you're selling here and the only way you're confident is if the market just dumps 100 points in 5 minutes and you take 15, you're happy. Right? You gotta get confident in your idea and how it's going to play out. And the only way that happens is from understanding what price should do, how it should move, what you're looking for in terms of red flags, etc. Right? What are the ways I would be looking for if I was looking short in here and got that? What would I be looking for? I'd be looking for this movement to not have a body closure above that high. Why that high? That's our last structural bearish candle. Not this one. That didn't close underneath this. This one closed above that one. You'll also notice this is a pretty good second area to enter. right? So now if you're here, this might be more clear to you that we're going lower. Does that make sense? Either way, if you can't close your eyes and be like, bang, this is my system, this is what I'm looking for to enter, then you need to be a lot more clear on that before you take trades. Because I guarantee you, Mikey could be on every drug on the planet and every bit of alcohol, but if you still asked him his setup, the one that he dreams about, he knows. Just ask him. He'll tell you. Believe me. Believe me, he'll tell you. And he'll tell you again to make sure that you heard. Right? You've got to know. You've got to own it. Because this market does not give free lunches. You've got to fight tooth and claw for that understanding. And even then, some days. I had 2 red days in October that were very frustrating. Very frustrating. Right? Good, man. Love it. Did I miss any questions in here? The market excels at that. Look at this, look at this, look at this. So you go long. You go long in here and you get wrecked. Right? And you go long expecting this to be the move that takes the highs and you get wrecked. Um, 5 points. Why 5 points? More importantly, does this sound accurate to you? This is coming down. We think we're going higher, or maybe even above this, or a minimum to mitigate this. And we're involved and we're long, say here, and we're up 7, 8. Oh, we're up 10 points now. Okay, it's starting to pull back. Let's get out. Just in case it comes back down to here. Or worse, we're involved here and it starts to move and then it comes back down to our area of interest. So we get out flat, not wanting to take the loss. Or even somewhere in here where it's a little less clear. All the time, right? So, given that we're in front of 20 to 25 people, my guess is that there's a huge financial thing going on for trading. Or alternatively, there's something to do with, and you actually see this in high achievers as well. You see the inability to take a loss. And what that does is that we want every trade to end up being a winner. Therefore, we don't want to give back the profit. We would rather die than have something we were up 10 points, come back, break even, or worse, turn into a loss, which stems from a couple of things. Number one, we don't want to give back anything in the market, which might be something outside of trading that's now affecting inside of trading. Or B, alternatively, we want every trade to be a winner, and we don't want, we're a little unconfident in our system itself, right? Which ends up doing what? We're long here, and us before we hit that button, even if we're in on the right side of the curve, and you're long here, right? We just swept, we just tried selling off, this closed bullish. Let's go, right? Let's go. I've got, say, a 10-point stop. Oh, baby, okay. I've analyzed, I've hit the button. I'm looking at this. I'm looking at this being garbage price movement. We just tapped into the area I wanted, and I'm long. Cool. Cool. You've done all the work, and then as soon as that button gets hit, bang. We're watching every single tick of what goes on in here, aren't we? And all of that prep goes out the window. Right? Now we're looking at this being a bear bar. Am I wrong? Do I get out here? If it starts trading here, am I wrong? Maybe I got to take this low. Maybe this isn't the actual sweep. Maybe A, B, C, D, and E, and then we start looking at this relief as, oh man, I better get out here before this literally does that. Yeah, bro. You guys saw how much money I made today, but it wasn't always like that. You think I haven't been here? In the exact place you are? Now we look at this as relief. Oh, we're up 10 points. I'm gonna get it out here before it does this again. And then what ends up being worse is that when we get out here and it runs up to here, we justify our bad decision of taking this off because we were right and we made money. Which is rewarding what? Our emotional decision in here. Because we got our desired outcome. And then what? Now we're focusing on outcome-based decision making. Not process-related decision making, outcome-based decision making. Right? We want to be focused on process decisions. Process-based decisions. Outcome, the desired outcome, is that we make money. But our job is to manage risk. Right? So how do we get involved with overanalyzing? You've got to do the very uncomfortable thing. The very uncomfortable thing, and trust yourself. Trust all the work that you've put in, and allow yourself to make decisions that will not work sometimes, but you have got to make new results appear from new actions. You will not get the trading decisions, the trading outcomes that you get from doing the same actions over and over that you've done in the past. you've got to do new ones. So that analysis is, there's 1,000,001 piece of information that's going in here. Not only from the market, but in your mind as well. So now you're picking out the only pieces of information that are relevant. As soon as you hit that button, there's specific things that you don't want to see. For me, if I was long in here, the number one thing I wouldn't want to see would be a body closure underneath that candle. It can wick down all the way here. I don't care. And I've seen this take me out doing this before closing here. That sucks. It's happened a lot. However, you see this bear bar, you'll get to a point where you're long, even if you're long here at 59 and you see this bear bar close at 55. And you're going, you guys are short in here? You're short here? Oh man. Thank you. Thank you for shorting there. I appreciate your contributions to my accounts. It's very kind of you, actually. I really, really appreciate everything you've done for me, right? Because seeing this area mitigated already, failing, the possibility of your objective that you're getting long for the first place playing out. There's only a couple of major things to pick out of the market that you're proven wrong. And you might have a stop loss under here, in which case you need to trade smaller so that you can allow it to do that. Or more understanding and you can tighten up your stop. For example, you might see an imbalance here. You might expect it to trade back down into here or whatever. Either way, we're away to the races now. Some days it won't deliver beautifully all the way up. But you need to gain understanding of what you don't want to see. And then, once you have that understanding and analysis, then you habitually program that into your trading system so that you have a habit of only looking for A or B. And if you don't see A or B, then they're paying you to get out, man. Pay me to get out of this position. And away you go. Away you go. Doing a collab with Patrick Wheelan, yeah. Yeah, man. But your takeaway, I don't care if you made money or not today. You're long here. You get to go look in the mirror and go, not that this is the bar, but how many people did not wait for the area that you did and got stopped out? Celebrate that, because we tend to look at all the things we did wrong or didn't do, and then we fail to really acknowledge all the things that we did right. And that's no way to make a deal with yourself, because you're going to be trading with yourself for a very long time, hopefully. Jose. Yeah, Top Step Live. Top Step was quite happy with my contributions to their portfolio today. But regardless. Anything else, lads and ladies? This is a long one today. I kept the recording going before anybody asks. Usually I stop the recording before the sauce comes out. We start getting real up in here. It'll be posted for everybody before anybody asks. It'll be for the community. Yeah, man. I literally, like, I showed you guys what I made earlier, cool, but like that does not fire me up, and that sounds ridiculous or cliche or whatever it does, but literally nothing fires me up like getting you guys involved. I ended up having to miss this because I had to drive and take my little one to school. So the trades that I took today, I grabbed a long in here off of this failure. And then I saw, that was on top step as well. I saw this here failing. So I thought I would get a trade probably back up into here, which would facilitate a movement down. So I took this sweep underneath this candle here, which looks ridiculous in hindsight, but I took that sweep and I rode that for 10 points, and then it stopped me out on my runner. I took this sweep for a trade back in above this. And then I rode this short down from here. I rode that short down from here. And then I decided later on, well, I'm actually not going to play that all the way through. I rode this up with the boys. This pocket trade that occurred in here. I doubt I got a better entry than Mikey, but I got the retest after this came back in. And I rode it up for this high before we went into our meeting. I was away from my desk for all of this, but that would have been a short that I would have been interested in taking. That also would have been one that I would have considered too. And I would have stayed out of all of this despite there being a few lovely trades in there. Right, but I was away from my desk from about here to here-ish. I basically logged in, and what did I see? I saw this on the 15-minute chart. I'll post it in here for you guys. And I said in private to somebody, the top is in. Top is in, right there. And whatever that ended up being. I guess that candle ended up looking like this, but it was up there. But in fairness, I wasn't even really, I thought today was going to be a chop fest, and likewise with yesterday too. So I wasn't planning on trading very much, and then it ended up being a beautiful day. Beautiful week, actually. Beautiful week. Not entirely sure how fully yet. Doesn't matter what I have to do. I have to win, keep working my process. So, again, the analogy that I usually use for everybody is if you're a soccer player or you're a basketball player and you go to the field every day for 7 years and you're practicing, but you're practicing kicking a basketball with your feet, or you're practicing juggling a soccer ball on your shoulders. It sounds great. I'm practicing every day. I'm trying really, really hard. I'm going to the court. But you're practicing the wrong things. Now, obviously, we're being a little bit silly with it, but you're practicing the wrong things. You going to get anywhere? Probably not. Your strategy is wrong. Or if your strategy is right, then the results you want are better aligned with what you're practicing. Yeah, Steve. Yeah, he was a soccer player before a basketball player. He's from the Lower Mainland, the legend. I mean, I don't need to tell you. I know. I don't need to tell you, bro. But yeah. My point is that practicing, people will say I'm back testing, but you're essentially just watching price. And that's fine. You'll be able to do that for a long period of time, and you'll see different things subconsciously and whatnot. But it's far more effective, both efficiency and time, to go into back testing and go, I'm just going to look today at narrative. Similar to the free narrative videos, right? Okay, how's this moving? Is it moving strongly down? Whereabouts are we trading to? You're asking yourself why, and that's the only thing you're practicing. You're not practicing getting involved or taking trades or managing risk or anything. You're only practicing narrative. We're trading down to something, and now you're looking at how you're trading down to determine whereabouts your objective is. For example, if this did this and now this low was here, you get your trade back up, and then we start doing it again. Your narrative might not be this zone. In fact, it probably shouldn't be, because you're looking at a higher time frame, which means we're going down to where a higher time frame should, which might be that low or something else. Right? But if you're seeing this movement, now your narrative asking why are we trading lower, we're probably trading into here. Right? Why are we trading higher? We're probably trading into the midpoint of a zone or into a higher time frame zone. Same sort of thing with this. 1, 2, like 3, 4. Right? Whereabouts are we trading down to? You've got the midpoint of this zone. People don't trade the pocket. You got that there. You could argue this here, this being manipulation. This is how I typically draw things for those interested. I don't draw from the manipulation leg, the full zone. Right? So people took this trade from the midpoint of this zone. People took it from the pocket. People took from the confluence of it. People took it based off of an EMA. People, like, who cares? Right? But my point is that you're practicing very specific things to improve yourself. And then once you're happy there, then you go into something else. Today I'm going to practice entries. Only entries. Only entries. Yes, I agree 100%. Right? I'm going to close the recording here.